Good afternoon, ladies and gentlemen. Welcome to this webinar. My name is Milka Muhambe. I'm the credit manager, HARAMBEE SACCO. And today we are going to learn more about loans. We are going to learn how we take loans. We are going to learn more about standing order loans. We are going to learn more about arrears and default. I would like to thank you and ask you to follow us on our handles, HARAMBEE SACCO, on our social media handles. Thank you. To start off, we will start by talking about why do we borrow? Why do we take loans? Loans are not bad, and we take them to build homes, to educate children, and expand businesses. They are not bad. They are tools when used responsibly. And the key to getting good loans is to ensure that the loan you take adds value and not pressure to you. And in HARAMBEE SACCO, our purpose is to empower our members to live with dignity and accomplishment throughout their life, throughout our lives. So a brief overview of the loans that HARAMBEE SACCO offers. We have both short-term loans and long-term loans, and our loans are also in the FOSA and in the BOSA. So to start with the back office loans, we have short-term loans, which are emergency and school fees. We have long-term, which is the development loan, the GSIDA, and the INUKA loan. The difference between our GSIDA and the INUKA loans and the development loan is the duration and the multiplier. For GSIDA, we have GSIDA 60 and GSIDA 72. If your salary passes through HARAMBEE, you can take the GSIDA 72, which is a longer term loan. If your salary passes through HARAMBEE, you can also take INUKA 96. If your salary does not pass, the only options you have are the development, GSIDA, and INUKA 84. We also have the Karibu loan, and this loan is available to members who are joining HARAMBEE. If you have joined HARAMBEE, you have made one contribution, you can be able to access a loan up to 1 million so long as your salary can be able to pay. We do for you a share boost, and we enable you that share boost becomes part of your deposits, and you can be able to access it. Even if you withdraw, it can give you dividends. We also have the Jenga and mortgage, which we have partnered with KMRC to give you loans to buy your dream home and also build your dream home. In the FOSA, we have salary advance, which is for 24 months. We have salary in advance for 1 month. We have GSOT, Finje Chap Chap, and Mbooster, and we also have dividend advance. All our loans are available through manual and through online through the online platform. For BOSA and for FOSA. For the FOSA, only salary advance can be applied physically. The rest of the loans that I've talked about, that is the GSOT, the Finje Chap Chap, the salary in advance, and the Mbooster, they are purely online. Now, when we talk about online loans, what do we mean online loans? The online loan is where you don't have a physical form, and our platform is available that you can take loans up to a maximum of 3 million. The guarantors accept to guarantee online by accepting. There's an SMS that will go once you've applied for the loan online. There's an SMS that goes to them to ask them to accept, and they accept using the SMS. And the guarantor is at liberty to accept or reject the guarantee. For back office, the processing is usually within 24 hours, except during non-working weekends. Except during non-working weekends and public holidays, since it must be appraised before disbursement. For the front office, it is disbursed immediately. As soon as your last guarantor accepts the guarantorship, it automatically goes to your FOSA account. So who qualifies for a loan in HARAMBEE? Anybody who has shares. If you have contributed between 1 month and for 6 months for people who are outside our common bond, this is for people with businesses, you have to have constant deposits, and there has to be ability for you to pay the loan. You also have to get qualified guarantors who are able to guarantee you that loan. If not, we also accept collaterals, which go through the process of valuation and charging. The repayment methods that are with HARAMBEE, we allow you to pay your loans through check-off, through standing orders, through direct debits. The standing orders can be internal or external, or through cash payments. But we avoid cash payments simply because cash payments have it's not sustainable. Because cash payment you can forget, and by forgetting you create arrears and stress. Also, it does not help the SACCO to plan liquidity. Remember, the repayments that you make enable us to grant the next person a loan. Now, automated methods protect you, the guarantor, and the SACCO. That is why we like our loans to be either on check-off or on internal standing order or external standing order. Now, when you apply for these loans, we have allowances that we use. The allowances that are not permanent on the pay slips and they're not used to process the long-term loan, since if they are removed, it makes your loan you will not be able to pay your loan, and it makes your loan go into arrears and eventual default. Allowances like extraneous, instructor's allowance, hardship allowances, we only use them for short-term loans. If your salary passes through Harambee, we can be able to consider using part of it, not all of it, but part of it to grant the loan. Simply because when these allowances are removed from your payslip and your salary is passing through Harambee, we can be able to recover our loans. The other allowances that are never used are leave allowances, transfer allowances, and any allowances for arrears, either salary arrears or allowances arrears. Moving on to the standing order loans, I know this has been a very it's a topic that is shrouded in mystery, so we want to debunk it. Standing order loans, when we talk about standing order loans, we mean these loans are not on check-off. These loans are deducted once your salary hits the FOSA, if it is a salary is passing through the FOSA. Now, when we appraise your loan, and maybe your loan, let's say your basic salary is around 27,000, and the net salary that you get is 9,000. It means you have exhausted your ability. You have only been left with a third of your salary. Now, if you want a facility with us, and it cannot be able to get into your payslip, we give you a standing order loan. This is deducted when the salary gets to the SACCO. You will not see it in the payslip. It will not appear on your payslip, but you will always be having it in our systems. Then we have the hybrid loans. Now, for hybrid loans, it means we have applied for a loan, let's say, of 1 million shillings. And this loan of 1 million shillings, development loan, the repayment is 26,334. The third rule only allows your payslip to accommodate 20,000. And you still need this 1 million loan. So what we do, we give you partly on check-off, the 20,000, and partly on standing order, the 6,334. So whatever appears on your payslip will only be the amount that can be deducted on check-off. Now, when your salary comes through the FOSA, the 6,334 will be deducted at that point. Now, when we tell you that we want to give you an internal standing order loan, we also leave you with a percentage. We can't use the whole salary. And sometimes some of our members tell us that they have other sources of income. Let me take this opportunity to tell you, if you have other businesses that you are running on the side and they give you income, Harambee Sacco you can take a business loan with Harambee Sacco. You can still bring that business account to Harambee and open a business account, let it run for 6 months, and you can acquire facilities using that business account. So that we don't overburden the payslip, we leave the payslip to be able to do other things. And then we have the external standing order. This is mainly for business owners, those who don't have business accounts with Harambee. We have wafanisi members whose salary does not pass through Harambee. Then we have members who we do not have check-off MOUs with the employers. And these ones, we give them loans, but they are deducted through external standing orders. Now, for external standing orders, it means this is a standing order that is run from your bank. Whether your bank is Cooperative Bank, it is KCB, or it is Equity. You go to the bank, you get a standing order form. We will give you details to fill on that standing order form. And when that money comes to Harambee, because it comes to our bank in Coop Bank, we can be able to know that this money belongs to this person so that we can upload it in your account. I've talked about wafanisi. Wafanisi are our members who have retired or have left employment and they want to join and they want to remain as members of Harambee. Now, we accept you to continue to rejoin. And the monthly contribution for you is 1,300. Now, if you do not want to get guarantors when you want loans in the Harambee Sacco, we allow you to get up to 80% of your savings on self-guarantee, so long as you have not guaranteed anyone. If you want a multiplier of your deposits, you also have to get guarantors or you get collateral. Payment is through the internal standing orders once the pension hits the Harambee Sacco, or through external standing orders. But we really encourage you to pass their pensions through FOSA so that they can enjoy both FOSA and BOSA loans. We are moving on to M-Booster. M-Booster is a loan that is granted through the phone. It's an online loan. It is granted for 1 month or for 2 months. Payment can be done anytime within the duration so that it does not go into default. Once the duration has expired, the amount is now paid, and you get a message that your FOSA account has been overdrawn to pay off the M-Booster. When you get this message, it means your M-Booster account has now moved away from your loan and is now in your FOSA. If you had taken an M-Booster of 10,000, and we usually give you a grace period of around 3 to 4 days after the expiry, so that we give you time to pay. If you have not paid during that time and you get the message that your FOSA account has been overdrawn, now the money that you wanted to pay for that M-Booster, you now deposit it in your FOSA account. Since you will not get it in the outstanding loans. If you go to the outstanding loans, you'll only see the other loans that you have. The M-Booster will no longer be there because it has already been transferred to your FOSA. Now, the challenge of this is that if your FOSA account, you do not regularize your FOSA account within good timing, it means that if we do it at the end of the month and the account is overdrawn, we have given you around 20 days before the next salary comes for you to regularize that account. Now imagine you have defaulted an M-Booster of 30,000 and you have a salary of 10,000. When the M-Booster goes to your FOSA, it overdraws that account with 10,000. Now when the salary comes in, 30,000, when the salary comes in of 10,000, the first thing it will make is it will make the account okay and reduce the overdrawn position by 10,000. Now your overdrawn position will be 20. Now remember, if you have any salary advance that you need to pay to that loan, if you have any standing order that you need to pay to that loan, they will not be paid that month. And you see, you still have a 21,000 deficit to pay. The next month that comes, if you have not regularized that account, it means that that account again, the 10,000 that has come will now reduce the default, the overdrawn position to 10,000. You still have not paid your salary advance. You still have not paid your loans. The third month, if you have not regularized, is when now you will finish paying the M-Booster. Now for 3 months, you have not paid your loan. This now creates arrears. And to avoid this, we ensure that pay your M-Boosters on time so that you can avoid having arrears. Because we usually get cases whereby members say that they took loans and their salary is passing through FOSA, but they don't understand why they are told that it is in arrears. Some of the causes of arrears are this M-Booster's default. Now, M-Booster access. M-Booster can be blocked under 2 circumstances. One, the member can come and request to us that they don't want the M-Booster. We can block it for you. Or if you are a frequent defaulter, making your loan go into arrears, we might be forced to block that loan, that M-Booster for a while until you regularize that account so that now you can be able to enjoy it later. If you cannot access M-Booster, if you have previously been attached M-Booster to your deposits, it will tell you are not eligible for this loan. That is, if you have any M-Booster attached to your deposits between 2020 and 2024. Remember previously, when you used to default your M-Boosters, we used to take them to the deposits and recover it temporarily. When your situations improve, we used to detach it and let you pay. Nowadays, we don't do that. So those that never regularize their accounts between that time, they cannot access M-Booster now until they pay those M-Boosters so that their shares can return back. Once you apply for the M-Booster, sometimes you get an error that your FOSA account has been overdrawn and it gives you a certain amount. What it tells you that your FOSA account has gone below the 1,000 shillings mark. What you need to do, if it tells you it has overdrawn by 10 shillings, kindly just deposit 20 shillings into that account and you can be able to access your FOSA account. If it tells you a response that you are irregular in your deposits, it means that the deposits for the previous month, we are in November. If it tells you that you are irregular in your deposits, it either means one of the two. Number one, either there's a month, the previous month has not been updated, maybe you are not deducted, or if you are deducted, the employer has not submitted the remittances for us to update for you. And number two, if you have arrears, sometimes we recover these arrears from deposits to make sure your loan is running well. Now, those arrears, if we recover them from the deposits, it makes your shares to be regular, and it will tell you that you have irregular deposits. For you to correct this, either you pay that 1 month, if you are not deducted, you pay that 1 month shares, and you can be able to access. Or if it is the case of arrears, you need to regularize your accounts, pay the arrears, and you can be able to access. Now we move on to loans and the loan adoption process. The key things, when you visit the SACCO and you are taking a loan and you are in front of a person appraising for you the loan, there are questions that you need to ask before you leave the SACCO. Number one, which type of loan are you giving me? Number two, what is the repayment amount for this loan? Number three, what will be my net salary after taking this loan? And number four, finally, what amount am I taking home? I think most of us, most of the time, we are excited about the take-home amount. We do not realize the effect of it in our salaries. Only for us to realize when the salary comes and the amount is less. And for us to be able to know that I will go home with 10,000, is it okay for my sustenance, or do I need to take a little less amount, so that we can be able to survive during the month. Now, once we disburse the loans, when they go to FOSA, they will send you a message, and this text contains the repayment. It tells you that your loan of 100,000 has been disbursed to your FOSA account, and nowadays it also gives you a repayment amount. Now that repayment amount is what you're supposed to see in your pay slip or the standing order that you're going to be deducted. So if you take a loan of, let's say, 100,000, and the repayment is 93,334, let's say 9,334, and you find that that is not the amount on your payslip, then it means there's a problem, and we need to address that problem early enough before that loan starts getting into arrears. Some of the common questions we get after the first adoption of a loan in the payslip is that I took a loan of 1 million, but my payslip has a higher figure. What we send to your employer is usually loan plus interest. So if you take a loan of 1 million plus the interest, we take it to your employer as that amount. When you want to clear the loan or you want to know your loan balance, you check your balance with the SACCO, because the SACCO only charges you interest per month. So every month we charge an interest, but the employer has the full loan and interest. And the amount that we deduct is only one. Our loans are special. So when the 9334 hits the SACCO is able to recover its interest and the principal, but you'll only have one repayment on the payslip, and it will be constant all through until the loan ends. Anytime you want to know your balance, you can get the statement, or you can use the USSD to check the statement. Now, check of loans. When you take a loan, let's say the loans that were taken in October, they will be adopted in this month in your payslip. For standing order loans, we do not have a grace period. If you take a loan like today, the salary of November comes, it will deduct. So standing order loans do not have a grace period like the check-off loans. When you do top-ups, because this is also another common question that we get, when you do top-ups, the top-up amount that is usually topped up is usually less the installment for the month. So any loan that you take in the month of November, we usually know the November deduction is coming. So when the top-up is done, it's usually done less this amount. And we know that this month, the deduction, when it comes, it will make that account to be zero. Now, if you have any excess, it can be refunded to you. But it can only be refunded once the new loan that you have taken is adopted. We do not refund if you have a new facility with the SACCO. We wait for that facility to be adopted first. So there are certain roles and responsibility in the loan processes. So what is your role as a member when you're processing a loan? Your role is to be honest in your application, you repay faithfully, and you communicate early in case of any changes that will affect the loan repayment in writing to the office. What is the role of the SACCO? The role of the SACCO is to process fairly the loan that you want, offer you advice, financial advice, tell you take this or not take this, and disclosure, maintain transparency when processing loans. What is the duty of the employer? The employer's duty is to deduct and remit promptly, notify the staff, notify the SACCO in case somebody is going on retirement or dismissal or interdiction. Now, another burning question that we usually get is whose responsibility is it when the employer does not deduct the loan? Now, the primary responsibility for your loan lies with you, the loanee. The person who has taken the loan, the responsibility of paying that loan lies with you. Even if your loan is on check-off and the contract is between the SACCO and you and not the employer. The employer is just an agent. Him is a go-between to ensure whatever he deducts, he remits. And he is a facilitator only. Now, if they don't deduct that money, either through payroll error, transfer, unpaid, anything that makes them not deduct that money. It is your duty and obligation to pay. We have made it easy for you. You can use the USSD, go to *357, go to loans, the menu, go to loans, pay loan, select the loan that was supposed to be deducted and pay that amount. Remember, now we are giving you the amount. When we disburse the loan, we are telling you the amount. So yours is just to feed that amount and pay it to the SACCO, because that money, when the employer does not deduct, especially when the salary does not pass through Harambee, we cannot be able to get it. You are the only one who can be able to pay that loan. So the responsibility of the loan remains with you, the loanee. So when the employer does not deduct, remember, even if you enjoy that salary, the end goal of that the end goal of all these things will be that the loan will go into arrears, eventually into default, and eventually into your guarantors. So for us not to reach that point, anytime the employer does not deduct, kindly pay that money so that your accounts are okay and in good standing. And the importance of paying, what is the importance of paying your loans regularly? It keeps you in good standing in the SACCO. It protects your guarantors. Remember, people guaranteed you this loan so that you can be able to do whatever you wanted to do with the money. So for you to be able to protect them, ensure that you pay your loans on time. Now, we go to the other aspect of arrears. I know some of you have gotten messages telling you that your loan is in arrears. So what are these arrears? These arrears arise from skipped installments. Now, if you took a loan in August and it was supposed to be deducted in September, and it skipped September and was adopted in October, it means it has an arrear of 1 month. Or if you took a loan that is supposed to be deducted at 93.34 and the employer only deducted 5,000 for some reason, then that is an underpayment, and that loan now starts going into arrears. Let me take you to a more technical part, which is provisions. What are provisions? Provisions are an expense to the employer, to the SACCO, and this is something that we provide for the loans that we give you. When a loan is in performing, we provide 1%, because chances of you defaulting is very little. When the loan now moves, when you have skipped an installment and it moves to watch, it means the SACCO now has to provide 5%. And if it moves to 3 months that you have not paid the loan, the SACCO has to provide 25%. It moves to doubtful, it moves down. Doubtful is 50%, and if that loan is never paid, it moves to loss. For a year, it moves to loss. And loss, we provide 100% of that, of provisions. Now, what does provision mean? Provision means that we deduct this money from our profits. What we are supposed to give you as dividends, we have to deduct this money. So let's take, for example, 100 members having a million loan, $1 million each. If that loan is performing, we are only providing 1% of that amount, which is 10 million. Now, if that loan moves to watch, we move to 5%, which is 25 million. If it moves to substandard, now we are providing 50 million. You see the effect of it on our profits. We have to pay this money. We have to set aside this money in case you don't pay for us to set aside that money. Now, what are some of the reasons for these arrears? There's the late adoption of loans. When the loans are not adopted on time, like I've said, if it delays a month and is adopted the next month, and you have not paid that month, the loan falls into arrears. Default of embooster, like I've explained before, recovery of the embooster from the FOSA makes you not pay your loan, and your loan goes into arrears. And when it goes into arrears, you need to pay the arrears. Now, underpayment due to changes in the member's salary. Sometimes the government deductions, like the ones introduced, the SHA, overpayments, and also people have now formed a habit of applying loans in multiple financial institutions. Non-payment of standing orders, maybe due to change of pay points. There are people who change their salaries. Now, when you are depending on that salary to pay your loan is going to be in arrears. If your employer delays in remitting the monthly deduction, your loan will also have arrears. Now, arrears need to be paid. There is no shortcut for arrears. If the loan has arrears, it prevents you from accessing any new facility in the SACCO, meaning you cannot take any new facility until you pay the arrears. You cannot get an embooster because it will tell you your loan is in default, and you cannot guarantee because it will always be saying you are a defaulter. Arrears, we can temporarily recover them from deposits, but this is not a permanent solution. It is just temporary until your situation improves. Now, if you want to get another facilities, that arrears must be reversed back to your loan so that you can be able to pay it and access other things. When you have arrears also, when we pay the dividends, you'll realize that if you have a loan in arrears, when you're paying the dividends, part of that arrears, part of the dividend goes to pay arrears. So that now our loans are okay, because we cannot pay you and yet tunakudai. We are claiming from you some amounts. So when you are paying the dividend payout, the arrears still will be recovered. Now when arrears, they are accumulating and you're not making any effort to pay, this moves your loan into default. And when this it becomes a default, now we have to recover it from your deposits and guarantors, especially if you don't provide a remedy for the arrears. So what are these remedies for these arrears? The remedy for arrears is either you pay cash, you increase your standing order repayment, or you use cash. You can use USSD app or over-the-counter deposits, or you can make deposits to a bank account. You can also visit the SACCO to have a payment plan on how you're going to pay these arrears. The other thing is that you can restructure the loan. And by restructuring, we are saying you come to the SACCO with your payslip. We calculate, we take all your loans, we recalculate them, we see what we can do for you so that they can accommodate your loans without having arrears. Especially if there is a reduction in your salary. Maybe there's something that has been introduced, or something has been removed, like the allowances. Now, the other thing is that if your salary does not pass through FOSA, and maybe we used an allowance was used and which has now been removed, now we can also tell you to consider changing your pay point to the SACCO so that we can be able to accommodate that loan, partly on check-off and partly on standing order. Now we move to default. When the loan arrears build up and the member is unable to pay due to several factors above, the loan will go into default and eventually be attached to the member's deposits. First of all, when we attach a loan, the first thing to go, we check your FOSA. If there's money in the FOSA, it pays the loan. If it is not enough, it moves to your deposits. If the deposits are not enough, now it moves to the guarantors. Now, the guarantors, by signing the form, they say that they will take responsibility of this loan if the loanee does not pay. Now, this loan becomes a new loan to you as a guarantor, and you are expected to make payments towards the guarantor loan. If you don't make payments towards this attached loan as a guarantor, it means that you cannot be able to access facilities in the SACCO. Now, you can choose to pay monthly, or you can come to the SACCO, and maybe as we are following up on the loanee who has defaulted, you can say, let me clear these loans, let me top up the loan so that it can give me breathing space as I continue to pursue the loanee to pay. Lack of payment will make the guarantor loan to go to in default, and if you don't pay, eventually we'll also now attach that guarantor loan to your deposits. Now, once the loanee makes good, starts to pay his loans, maybe the circumstances have improved and is now able to pay his loans, we detach the loan back to the loanee. Now it is removed from the guarantor back to the loanee. Now, all unpaid interest is also applied on the loanee. Remember, when the loan is attached to the guarantor, they don't pay any interest. And payments that the guarantor has made, any payment that the guarantor has made will be refunded back to him. But this is subject to so many things. Number one, the loanee must be paying the loan in full, either through check-off or through his salary passing through the FOSA. The guarantor who has this overpayment must not be having any arrears on his current loans. So we cannot refund you, yet we are telling you that we need money from you. So what we do is that we recover any outstanding arrears on your current loans, then the rest we refund you. If the loanee is underpaying, let's say the loan repayment is around 26,334, taking an example of a development loan with an interest of 10,000, and maybe the member's salary is around 8,000, meaning that amount cannot be able even to pay the interest of that loan. We cannot be able to detach this loan. What we usually do is that we retain this money. After a certain period of time, we detach the loan and attach it so that now it gives the guarantors some reprieve. But we cannot detach and refund, because that loan, if you are underpaying the loan, it means it will start again accumulating arrears. For external standing order loans, for those who have guaranteed external standing order loans, the loanee needs to pay arrears of the loans, and we have to see consistently 3 months that they have been paying the loan consistently for 3 months before we can refund the guarantors. This is for us to assess the member. This is to for us to assess the member's ability to continue paying the loan. At this point, I also want to thank you for joining. I can see you're continue joining, and continue following us on our social media pages as we continue learning more about these issues of loans and defaults. So, once you have attached the loanee is usually listed on CRB, and we usually give this account to our debt collector for them to follow up for recovery. We also engage employers through letters and conversations that we can be able either to bring the salary or adopt our loan if that member went to other financial institutions after taking loans with us, so that we can be able to recover our loans and relieve the guarantor. The obligation of the loan payment still with the loanee. The loanee should not say that the guarantors paid for him the loan. We still expect you to pay the loan, and we also discourage payments of monies to guarantors through private arrangement between the loanee and the guarantor. Any payment of the loanee, any payment that the loanee wants to make towards the loan, we really encourage you to pay to the SACCO. So what do you do to avoid default? Always check your payslip to confirm the deductions have been made. Once you get your payslip, check has the deduction been made, especially in the first month of the loan. Number 2, you are also welcome to visit the SACCO anytime to check the progress of your loans. Then this is a matter of your own goodwill. Do not take your payslip to other institutions. When you have taken your payslip, let's say you have visited Harambee, taken a loan, don't go to another institution to take another loan, because the payslip is one, and the people who are going to suffer are the guarantors. Now, if a deduction is missing, kindly follow up with the SACCO and the employer so that we get to the bottom of it. Were you deducted or were you not deducted? If you are not deducted, kindly pay the installment. If you transfer, retire, or leave employment, also arrange alternative repayment plan before you exit so that you don't leave your guarantors in problems. Now, if there is a major shift on your salary, that is removal of allowances, introduction of government liability, stoppage of salary, or half salary, or maybe you're on half salary, kindly inform the SACCO. Visit the SACCO with the necessary documentation to show that your circumstances have changed so that we can see how we can work around it. Don't wait until the loan has been attached to guarantors. That is the time now you come to the SACCO. Our doors are open. We have a listening ear. Come and tell us, this has happened in my workplace. Kindly hold my loans for a while as I pursue the best way to sort this thing out. Now we move to guarantors. Now, this is just as we guarantee people, what precautions must we take? Also, what are my liabilities as a guarantor? So when you are guaranteeing a loan, ensure the loan you are guaranteeing, the form you are signing is fully filled with the guarantor's name, with the loanee's name, department where they are working, and amount in words and figures. Please don't sign a blank form. Let nobody bring you a blank form and you sign. Now, once you have signed on the form of Harambee, when it comes to the SACCO, when we put your name in the system, it always sends you an SMS at the point of appraisal. When we start the process of loan processing, we send you a message telling you, Mr. X and X, you have guaranteed Mrs. X and X, and the type of loan and the amount. Now, ensure that the number, this is just to tell you, ensure the number that you have in the system is what you have with you always. Some of us, the number that we have in the system is just for the transaction type. The other times you are with another number, meaning most of the communications of these loans bypass you. Now, because that time we send you the message, if the loanee has arrears, an SMS will be sent. If the loanee has defaulted and we have attached, we send an SMS. If the loanee is topping up a loan, also we send you an SMS and tell you the loanee has cleared the loan. Now, ensure that this number that you have, it is very important for correspondence with the SACCO, because nowadays we correspond more on SMS. Remember, you can refuse guarantorship by informing the SACCO at any point before the member loan is disbursed and withdraws the funds. If you feel you are not comfortable to guarantee this person, you can rescind your guarantorship. Now, guarantee people you know and trust. Remember, our common bond has opened. We have business people on board. We have wafadisi. We have business people. We have people we don't have MOUs on. All these are members, and you'll find them on our banking halls. You'll find them at the loan processing people, and they will always be looking for guarantors. Do your research well. Don't just guarantee any person. We have also, the online platform is also the best way to go about it. You can have your own group of guarantors, and you can be guaranteeing each other, even if you are geographically separated. Even if one is in Kisumu and the other one is in Mombasa, they can still guarantee each other. You can check the loans that you have guaranteed so that you are sure these are the people I've guaranteed on the members portal, or you can visit the SACCO and ask for the list of the members you have guaranteed. And then once you have guaranteed a loan, remember this is a journey that you walk with the member, with the loanee. You can always walk in and ask, is the person I guaranteed paying the loan well? And you'll be informed. Now, once the loan has gone into arrears, if the loan has been attached, gone into arrears, remember you cannot be replaced as a guarantor because we cannot transfer a bad loan to another guarantor. So the only option you have is to make sure this loanee pays or tops up this loan and relieves you as a guarantor. But we cannot replace a guarantor with loans with arrears. At the point of exit from the SACCO, you will need to replace all the guarantors with active loans for the SACCO. So if you have any person that you have guaranteed, if you want to exit the SACCO, you have to replace these guarantors. In case of dispute of guarantorship, if you are disputing that I did not guarantee this person, you are supposed to do this through a letter so that it can come to the SACCO and go through the investigation processes so that it can be determined if it is a fraud. If it is a fraud, you will always be removed. If it is not, you will always be told. Now, if you have been attached a loan of a member who you know is deceased, first of all, find out, is the office aware that this person has died? If not, and you know the family, kindly let the family visit the SACCO so that they can know that they can bring the documents to the office so that the office can know that the person has died and you can be detached and they can claim that money from the insurance. So maybe we can do a bit of Q&A. So which other, Ernest Kirera has asked, which other loans other than Mbooster can one be able to pay for a year? Our loans range from 1 month to 96 months. You can always choose the variety, the period that you want. If you want an emergency and you want to pay it within 2 months, if your payslip allows, you can as well pay it within 2 months. So a year is just a selection. You are able to take any loan and you can pay it within a year. And then there is MGOR 9118. Once the default loan has been attached to my shares, can I access any other loan so that I pay the attached loan? Yes, you can. You approach the SACCO with your payslip. We check. We detach that loan and we check what you can qualify for and we can be able to pay. So long as the loan is not attached and you're not called a defaulter, you can always come to the SACCO and we can appraise for you the loan. Joseph Orono, we 300. What causes arrears when the loan is being deducted from my account? As I explained before, arrears can be caused when they are skipped installments. Now, if your salary passes through the FOSA, the first thing that we look at, have you defaulted any Mbooster? Because that is the first thing that happens. The other thing is the overcommitment of salary. If at all you had a standing order loan or a check-off loan, you had a standing order loan or a salary advance, and you went and took a check-off loan, maybe the check-off loan that you had was not within their third. You still had a space within their third. Now, when you go and take a check-off loan and it covers their third that is remaining, it means the amount that is remaining for us to deduct our loans is not able to cover that loan. So either Mbooster or overcommitment of the salary can cause arrears. But you can visit the SACCO so that we can be able to see and how we can be able to assist you. Then Okeyo Elo is asking, nani anafaa kufuatana na guarantor loan? Okoyo, when you signed this loan, you told us that you know this member and you'll be able, and the form is very clear. If you look at the form behind there where you're signing as a guarantor, you say that you know this person and you'll be able to pay the loan if this person does not pay the loan. We do not say that you are supposed to follow the guarantor on your own. Like I've said there, we usually send debt collectors. We have a panel of debt collectors. We list him on CRB and we also engage the employer. It is a collective effort from all of us that we follow this guarantor so that he can be able to start paying his loan. It is not a one person's job. It is a collective effort for all of us. So you can follow on your part, us we can follow from the employer, and we can engage the debt collector. We can also list him on CRB so that he cannot get any facility, so that in case he needs a facility, he has to clear the loan that he has with Harambee. Ernest Kirera, do you have a way someone can increase share deduction from payslip other than appearing physically to fill the form? You can even do it through our social media handles. You can ask them that you want to variate. You see, why we tell you to fill the form is that because you add that pay slip so that we can be able to assess your ability to pay the variation. Because sometimes you might be very willing to do the variation, but your pay slip cannot accommodate. That is why most of the time we tell you fill the form and attach the pay slip. But the request can be placed anywhere. You can place it through our media social handles and it can be done. Anthony Barasa asks, what is the meaning of standing order? Standing order means that you have a standing order, you have an order that every month something will be deducted from your salary. So if you have a loan that you are taking with us, maybe a GSIDA loan with a repayment of 4,334, every month when the salary comes in, through that standing order, which is an order that you have given the bank, it will always be deducting that money. Frida Muguru, hello. When a member defaults a loan, do you first contact the employer first to inquire whether the defaulter is still working or under interdiction before attaching the loan to guarantors? By the time we are attaching that, we have referred that loan severally to the employer and we are not being able to get. Sometimes when we ask the employer tells us that the person has already accessed other facilities, so we cannot be able to deduct our loan. That's the time now we are forced to go to the guarantors. But we keep on keeping the conversation open with their employers so that we can be able to assist the guarantors. It is not our wish that a guarantor pays the loan for a loanee. It's our wish that the loanee who took the loan be able to pay his loan. So in case that the employer is willing and we have correspondences, if you have a guarantor loan, you can visit our offices. Come, we do a letter to the employer so that we can see the best way. We request the employer always either adopt our loan or bring the salary to FOSA so that we can be able to recover these loans. Then there is Gideon Kiplangat Chepkwonyi. Apart from withdrawing money from FOSA account to M-Pesa, can one transfer money to his or her bank account online? At the moment, it is not possible. The only way you can do transfer is either through banker's check or EFT, or you do the M-Pesa transfers. John Kimanzi, Z3, why is Inuka loans accumulating much interest compared to other facilities? Kimani, Inuka is a loan that has I think it's the loan with the biggest interest. What happens is this: the more we give you leeway, the more we give you more months, the more the interest is. So Inuka is essentially for 96 months. If you look at development loan is at 1%. It is times 3 your deposits, and it's only for 4 years. Now Inuka we go to up to 8 years. That is why it has a bigger interest rate than the other facilities. I think I've done most of the questions. There's a question of where have you reached on the loan buy-off from other financial institutions? We are still working on this, on the loan buy-offs. We are still looking at the modalities of it, and once it is opened, you'll be informed. But I really want to speak a little bit about it, even when we open it, so that you are aware of the process of the buy-off. Now, when you want a buy-off, if I'm to talk about the buy-offs for a little bit, you are requested to present all the statements, especially for Equity and Cooperative Bank. If you have other loans on mobiles or on salary, kindly present all the statements for Equity and Coop Bank. Now, after the loan has been disbursed, after all the processes have been done and the loan has been disbursed, remember the account is frozen. You can't access that amount. So what happens is that you are required to come to the office, or you can ask through our social, or you visit the branch where you took the loan. You'll be given an EFT confirmation receipt. This receipt, you take it to the bank or the financial institution where you cleared the loan. The bank will issue a clearance letter. And please note, that's why I said for Equity and Coop Bank that you need to present all the statements, because the clearance letter will not be issued for these two banks if you have any pending loans with them. So if you have a mobile loan or anything else, they will not issue with the clearance letter. So you'll be forced again to get money to go and pay these balances before they issue you. Now, once the clearance letter has been issued, you request them to send the stoppage to the bank, to the employer. Now, as a member, most of the time we deal with the branches. Now, the branches will even send you an SMS and tell you your issue has been closed. Remember, the branch will send it to the headquarters, and the headquarters are now the ones to send it to the employer. So there is always a time lag between that process. The HQ sending, the branch forwarding it to the HQ, and the HQ forwarding it to the employer. Because for us to be able to release funds to you, our loan must be adopted in the payslip, and the stoppage must be there. So there's always that that's a bit of time lapse that sometimes most of us get impatient, but we need to work on, both of us, we need to work on the stoppage to get to the employer so that we can be able to book the loan. Once the loan has been booked, now we can be able to, once the loan has been booked, we can be able to release the funds to you. And after we have released the funds, we usually retain 1 month, and it's a lien. That lien is also retained until the deduction appears on your payslip. Once that loan deduction has appeared on your payslip, you can approach any FOSA branch and you'll be able to release the funds to you. We have Magara 64, who is saying he's Mfanisi and is asking how he can access a loan from us. Magara, welcome to this session. If you're a Mfanisi loaner, if you're a Mfanisi member, you have two options. Number one, you can visit any branch with your loan form, with your bank statements. They will assess the bank statement. The first place of doing a Mfanisi loan is usually a bank statement. We check your bank statement, we look at it, we see what has been, what you can be able to pay, we appraise for you, then we ask you to fill a standing order. So, if at all you are Mfanisi, one thing you need to know that you need to contribute your shares for you to be able to access the loan. So we will tell you to do a standing order. If maybe you have taken a loan of 100,000, 200,000, which you want to pay within 48 months, and a reduction of 5267, a reduction of 5267, we will tell you fill a standing order. We will give you that repayment of 5267 plus 1,300 for the shares and the sink fund. Now, once you've done that standing order, depending on the loan, if you have shares, you can guarantee yourself. You just bring the form plus the filled loan form plus the standing order form, and it will be processed. If you want to look, if your shares are not sufficient, then now you are forced to look for guarantors. Once the loan is fully guaranteed, you present it to the office and it will be able to be processed and you'll get your money. Essentially, it's a one-day thing, a 24-hour day thing. You will walk in and walk out with money. So I think we have about 10 minutes. Maybe I'll take the last few questions. So, Mutua Joseph says, Mutu ana default loan, then guarantors tunalipa. Then the same the defaulter akija kwenyu mwampa loan without considering the past. Why? Mutua, when a person defaults, when their loan has been attached to guarantors and the person becomes back to be of good standing, we usually ask them to restructure. Remember, maybe this loan was taken a year ago and the loan has now passed. It has skipped some months. It is already in arrears, it's already behind. We usually encourage these members to restructure the loan. If the payslip is accommodating, they can be given a loan. They will not be given a loan that they cannot pay. They cannot be given a loan if the guarantors are paying his loan. The only time he can be given a loan is when we are reorganizing the payslip, maybe to allow him to be able to pay the loan well. Maybe now the circumstances have changed and he can be able to pay. So the only time we can give a defaulter a loan is when the circumstances have changed and he can be able to pay. So we are only restructuring that loan. He can be able to pay. Then we have, I need a loan for commercial property to build rental houses. You are giving home loans, upgrade to commercial loans. Nguru Edwina. We are giving home loans because, as I said before, we are partnering with KMRC. And KMRC is mainly on building the person. We are not doing commercial loans as such. But you can also still take the Wainuka loan, and you can also do your commercial building. You can also do the rental houses. You can take these loans and do the other loans that we have, so that you can be able to do your houses. The Inuka loan is there, you can be able to do. But for now, since our partner is KMRC, we are not able to do commercial loans. My loan has not been deducted for the last 3 months and brought this to your attention the first month, but up to now nothing has been done. Cyrus Malombe. Cyrus, I would like to ask you to share with us your payslip so that we can be able to see. Sometimes the payslip cannot be able to accommodate the loan, so no matter how many times we send the deduction, it will not be deducted. So we'll need to see your payslip. Kindly share with us your payslip so that we can be able to see what could be the issue. Thank you. Lastly, we will talk about this 120-month loan. There's been a lot of questions around it. For now, it is not yet, we do not have it yet. Maybe in the near future it will be considered, but for now we do not have the 120-month loan. Our loan, the largest loan that we have, is for 96 months. I would like to close this discussion by saying most of the loans that we take, let us borrow for growth, not consumption. Let us make sure that the loan term we take, let us not take an Inuka loan for daily living, to pay rent and all that. Keep monitoring your loans as a member. Keep monitoring your loans. Come to the SACCO, visit every other time. Don't visit when things are bad. Visit even when things are good, so that you can be able to walk through this journey. You can go to the SACCO, you can visit the portal, you can check the portal and see how you are. Also, we want to encourage you to save, because the savings, when you grow your savings, you grow your borrowing also. So we want to encourage you to save. At least continue saving. You don't need to wait for the payslip. If you get some money, and this is also for loans, if you have some money that you need to deposit, kindly, you can deposit through the USSD. You can increase your shares through the USSD. You can reduce your loans through the USSD. It is not a must that the loans are paid through check-off. So if you have some money lying around and you want to reduce your loan, you are most welcome to do it through our USSD code. And I would really love to take this time to appreciate you for taking this time to join us. Anything that you have not answered, you are invited to visit our offices for personalized service. Our doors are always open for you and for advice. Thank you very much, and may God bless you.